Hello everyone, welcome to the Ichimoku daily analysis for gold for Thursday, June the 18th. Well, a bearish day today, and we can see that instantly by the colour of the candle. The candle was red, which means that the market was net bearish, and we have an increase in the size of the body, which doesn't really say much for the strength of the bulls. The bulls were pushing this market up previously over the last few days. They closed the market in control yesterday, and they've lost control of this market. The market has closed down near the low, not quite at the low, but near the low, which means that there's some form of moderate to strong control by the bears in the market. Now, even though the trading dynamics for the day tell us that the market was bearish, we need to look at the trend, and the trend is still up. So we have a bit of a dilemma here. We have a bearish day, it's trading, but the trend is still up. And the trend is probably more important, but the fact that we have a bearish day's trading tells us to be ready for a possible change of trend. Now we know that we're in a second time frame downtrend. We have a series of lower peaks and lower troughs, and there's every chance that this will be a swing high in the second time frame downtrend. So it makes the low of the current candle very, very important for this market. If you're looking to go short, that's probably a good place to place a sell stop, or even possibly for those that are a little less adventurous down below this previous swing low here. So we should be looking for this market to continue the bearishness to the downside, and we know that we've got this support area down here at the top of the cloud. So just going back a bit, we have a first time frame uptrend, which is what we see as the retracements in the second time frame downtrend. We have a higher high and a higher low, and we'll be looking for a lower high and a lower low for the second time frame downtrend to continue on its way. Now, if we look at our Ichimoku indicators, the Tenkan-sen is pointing down, and pointing down very strongly, which means that there's a lot of downside momentum to the market now. So the market tried to rally up towards the Tenkan-sen, didn't quite get there, but we can see that we had downside price rejection. As it tried to rally up there, it's held as some sort of resistance, not exactly, but within that zone there's been some sort of resistance near the Tenkan-sen, and it's little wonder that the market's sold off. Now, interestingly though, looking at our GoldJune18th2009, it's still pointing up, and that presents us with a bit of a dilemma. It seems to be having a lot of trouble turning around. It's not even pointing sideways, reflecting any congestion that might be taking place. So we also had the crossover of the Tenkan-sen below the GoldJune18th2009, which in itself is bearish as well. So we have quite a few bearish signs. We have the market trading down below the GoldJune18th2009 and the Tenkan-sen. We had the crossover of the Tenkan-sen below the GoldJune18th2009, which is bearish. We've got the Tenkan-sen pointing down, which is short-term bearish. But importantly, you're still trading up above the cloud, which is still positive. Now, as we've said before, when we have the cloud and the market trades around the cloud or the Kumo, and the cloud is flat, it tends to act as an attractor of price action. And the most likely scenario is for this low to be taken out, this support at the swing low to be taken out, in the market to trade down to the top of this cloud, which is roughly about 9.15, 9.16, 9.15. So the likely scenario is to trade down to there and look for some sort of support there. But importantly, if we look at the peaks and troughs, second time around uptrend, change of trend, and we know that trends continue on their way until we have other evidence. So likely to trade down to this region.